The French bank Société Générale has struggled with unauthorized trades occurring on their Delta One trading desk in the past. By struggled, I mean lost $5.2 billion in 2008 and caused Ben Bernanke, who we call the Ben Bernanke around here, to cut interest rates by 75 basis points, the largest interest rate cut in more than 20 years at the time. The rogue trader in question was Jérôme Kerviel, who managed to go unnoticed, amassing a $50 billion position in Eurostoxx futures. And when SocGen discovered his unauthorized trades, they notified their regulator and quickly began selling the position. Markets were quite illiquid at the time as the US market was closed for the Martin Luther King Day holiday, but US stock futures were trading in the overnight market and the selling pressure caused S&P futures to trade limit down. Newspaper headlines began calling the day Black Monday, and fears of a worldwide stock market crash were so intense that the Federal Reserve held an extraordinary emergency meeting where it was decided to slash interest rates. The Federal Reserve later said that they had planned on cutting rates anyhow for real economic reasons and that they had just brought the rate cut forward by a week to prevent a stock market meltdown. The futures position that Jérôme Kerviel had built was far larger than the bank's entire market cap at the time, which raised some eyebrows when Kerviel initially claimed that his bosses knew what he was doing. In court, he admitted to exceeding trading limits, faking documents, and entering false data into computers, but said that he was really just a cog in a broken machine, an innocent in a twisted world. That's often the way that I feel too. Kerviel's lawyers described him as a humble young Breton, passionate about banking and economics, who was corrupted by Société Générale, a pawn in a global frenzy for profit, and called for him to be cleared of all charges. Jérôme was sentenced to 5 years in prison, but only served 5 months. He was briefly the world's poorest man, owing the bank $6.3 billion. This was later reduced to $1.1 million. After being released from prison, Kerviel met with the Pope and embarked on a bizarre pilgrimage from Rome to Paris in a stand against the tyranny of the markets. After the Kerviel incident, SocGen went to great lengths to improve their risk systems. A $5.2 billion loss does tend to focus the mind. The bank's new CEO told investors last September that strength is best-in-class risk management, and on these strong foundations, high-performance businesses can thrive. You can only imagine my surprise when I read the Bloomberg headline earlier this week, SocGen traders in Asia exit after options bets go undetected. This problem had once again happened on the bank's Delta One desk, and according to Bloomberg, the bank's risk systems had failed to register complex stock trades.
Oh, sacre bleu!
Now, first up, I would argue that it's just time to change the name of the desk at SocGen. That way, if another disaster occurs, at least it won't have that Groundhog Day feeling. The Delta One desk basically does boring hedging trades with minuscule margins. Maybe rename it the low profit arbitrage desk and it might attract a different type of employee. You just don't need the type of guy who thinks that he's joined an elite special forces military division trading baskets of stocks against an ETF to earn a basis point. That's clearly a recipe for disaster. Anyhow, according to the article, a pair of traders in Hong Kong left SocGen after the bank discovered a batch of risky bets that went undetected by the firm's risk management systems. And amusingly, one of them responded to this story yesterday with a rant on LinkedIn.
Wake up!
Before we dig into that, let me tell you about today's video sponsor, Babble, one of the top language learning apps in the world. Summer travel is right around the corner, and with just 10 minutes a day, Babble can help you speak like a local on the trip of a lifetime. I decided to use Babble because it was the world's first language learning app and is also the best-selling. Babble have designed their lessons to be just 10 minutes long, and they help you learn a new language through real-life conversations. These quick daily lessons, which I've built into my morning routine, help me improve little by little every day and are easy to stick with. Tengo muchos zapatos y los uso todos. With Babble, you should be able to have basic conversations in a new language after just 3 weeks. The lessons are fun to do and prepare you for practical conversations about travel, business, relationships, and more. Learning some Spanish really helped me get by on my trip to Spain last summer. Click the link in the description or scan the QR code to get 60% off on your subscription, and let me know in the comments section what language you'd like to learn. Now look, before I'm accused of picking a bad photo of Kavish, the trader in question, as clickbait for my video thumbnail, I didn't dig through his Instagram and find a photo of him in his wife's sunglasses. This is his LinkedIn profile photo, and if you're hiring, he's open to work. Look, it's 2024, and after a lockdown and a few years of working from home, this is what a professional photo of a VP at an investment bank now looks like. And if you're being judgmental, that's on you. Okay, sure, I might have changed the background a bit, but I'm just trying to present him in the best possible light. I think he would probably be happy with the change. Anyhow, Bloomberg reports that Kavish Kataria, a trader on the bank's Delta One desk, departed last year along with the head of his team, Ken Ng, after an internal review of transactions on the desk. Bloomberg sources say that while SocGen didn't lose any money from the transactions, the trades could have cost the firm hundreds of millions of dollars had an intense market downturn occurred. Now, normally in situations like this, the people accused of wrongdoing keep quiet and allow their lawyers to represent them. But in this situation, Kavish Kataria decided, in the style of Sam Bankman-Fried, to instead present his side of the story on social media. Who needs lawyers anymore, right? In his LinkedIn post, Kataria writes, "Trading industry is so big, but there are no rules or regulations which fight for trader justice." Kataria might be right, and who's better positioned to stand up for trader justice than me? Defund compliance. A SocGen spokesperson told Bloomberg that their strict control framework allowed them to identify a one-off trading incident in 2023, which didn't generate any impact and led to appropriate mending measures. Kataria wrote on LinkedIn that he was being made a scapegoat and said that all of his trades were correctly recorded and visible to his supervisors in both Hong Kong and Paris. He went on to say, instead of taking the responsibility of the lapse in their risk systems and not identifying the trades at the right time, they fired me and terminated my contract. In his post, he claims that he didn't conceal his trading activity and that all trades were booked automatically in the bank systems, generating an email to others within the firm showing the trades had been reconciled. Now, at this point, it might make sense to quickly go over what the Delta One desk at an investment bank does. It's a trading desk that's possibly more defined by what it doesn't do than what it does do. Delta One desks trade financial products, including derivatives, that are not options. Usually Delta One desks are part of the equities division at a bank, and they deal in baskets of stocks and related derivatives like futures and forwards. Conveniently for us, SocGen has a page on their website explaining this. It says, a delta 1 product is simply a product that has a delta of 1. It's therefore a derivative with a linear and symmetrical payoff profile since its delta remains around 1 regardless of changes in the underlying asset. And then to clarify, they say it's therefore a product with no optionality. Now, in his defense on LinkedIn, Kataria implies that the reason he lost his job is that he traded options on Indian indices. You'll note that the definition of a Delta One desk was that it trades not options. Kataria goes on to say, this strategy was one of the different strategies which I used to run on Indian indices. There were some oven-right positions as well as index options, as well as single stock options on Indian indices on which risk reporting was done on daily basis. This clearly tells you that they knew options were traded on the desk, and this was not completely new on the desk. I won't lie to you. While I am fighting for trader justice, it was not easy reading the piece that he wrote on LinkedIn because of the grammar, punctuation, and spelling errors. I don't know who hires these people. I'm guessing that oven-right positions means overnight positions and that risk reporting means risk reporting. But I don't want to put words in his mouth. Maybe not everyone knows this, but if you decide to channel SBF and defend yourself from accusations of fraud without relying on a lawyer, you can still rely on spell check. And if every word that you've written is underlined in red, it means that something's gone wrong. Maybe someone's played a trick on you and flipped your keyboard upside down, which is not a nice thing to do to someone who's just lost their job. But come on, Kavish, pull yourself together. You're a vice president. If something happens to the president, you're going to be in charge. We need to sort this stuff out. Anyhow, back to the problem of the Delta shortfall on the Delta One desk. Bloomberg reports that Kataria was hired by the Hong Kong office of SocGen in 2021 and that he focused on trading Indian shares. They say that it's alleged that some of his trades were not logged correctly in SocGen's back office systems because Kataria executed options trades during the day with no overnight positions, and he tended to arrange them for the date when the contracts expired. The article says that when SocGen discovered these Indian options trades, they stress tested the positions to see how they would have performed in a falling market, and the stress tests allegedly found that in the most extreme case, they could have potentially lost the bank hundreds of millions of dollars, which is bad, but on the bright side, hundreds of millions of dollars is way less than the billions of dollars lost by Jérôme Kerviel back in 2008. So things are moving in the right direction there at SocGen. According to the Financial Times, Kataria is not accused of breaching risk limits on his trades, but of trading options on Indian indices, which SocGen say he was not supposed to do. And risk limits don't just apply to position sizes, they also apply to which financial instruments a trader is authorized to trade. Usually traders are well aware of what they're allowed to trade and what's off limits. In his LinkedIn post, Kataria wrote, "I would like to ask, during all this time, there was no one to check what has been happening on the desk." He went on to say, "I accept I did trade options on Indian indices, and according to me, it was in my mandate and well within the trading limits." Now, I'm doing my best to fight for trader justice here, but when appealing to authority, according to me, I was allowed to do the trades is not really the best defense. You really have to claim that someone up the chain of command authorized you to trade financial products that your job description, Delta One, specifically says that you don't trade. His point that it took months to discover these allegedly unauthorized trades does raise questions about how good the risk systems are at SocGen. Matt Levine at Bloomberg wrote about this story yesterday, saying that he doesn't have a fully developed theory of Delta One roguishness, but it does seem to have a higher than usual incidence of roguishness. He says there's something about its technicality, about the discipline of making money by buying and selling almost but not quite identical things that might give people ideas, especially at SocGen. I'm just hoping that given enough time, Matt will come up with a unified theory of Delta One roguishness, as this needs to be understood better by all of us. In a follow-up post on LinkedIn, Kataria wrote, In spite making more than 50 million PL for the bank in 8 months, I was fired without even paid single penny. My previous year bonuses were also withheld, and I was just paid 7 days' salary. If I've done the mistake, then the entire risk team and other bosses are responsible for the same for not identifying my trades. A commenter on his LinkedIn post asked him if trading options on the Delta One desk was actually part of his mandate, and he replied, "According to me, it was, and if the same was not, then it should have been stopped on day one rather than taking more than 4 months to detect to the same. There were trades which were booked overnight and the risk was reported on those trades. They were only not able to capture the risk on intraday trades." Now, once again, I'm not entirely sure what any of that means. Grammar, punctuation, and spelling do matter. But I think what he's saying is, according to me, it was within my mandate, and I'm innocent because I wasn't caught right away. I'm not sure, though, it's difficult to interpret this, and that's why people often use lawyers or at the very least spell check. Kataria claims in his LinkedIn post that he had made $50 million for the bank in 8 months and says, "My previous year bonuses were also withheld and I was just paid 7 days' salary." This is often how things work at banks, where a lot of your bonus compensation is withheld and can be clawed back if you make big losses at some point in the future or if you're let go for gross misconduct. There's an argument that if a trader makes an honest mistake and steps outside their mandate, their manager could just take them aside, explain the problem, and give them a warning and move on. On the other hand, if that mistake involved breaking the rules and risking hundreds of millions of dollars to make $2 million, it might imply that you're not very good at your job of weighing risk and return, and that could be grounds for dismissal. We don't actually know many of the details of what happened. Everything that's in the press is hearsay, and a person is innocent until proven guilty. SocGen reported earnings this morning, which were not as bad as expected, and the CEO told the press that the unauthorized trading in Hong Kong had no impact on the group or its clients and was detected in the due course of things by the bank's control systems, which were shown to be effective. If you enjoyed today's video, you should watch my top 10 rogue traders video next. Don't forget to check out our sponsor, Babble, using the link in the description. Have a great day and see you in the next video. Bye.